Most people pick their first credit card completely wrong. They go with whatever their bank offers, or they just grab the first one they see advertised, and then they spend years missing out on hundreds, sometimes thousands, of dollars in rewards, cashback, and benefits they never knew they were entitled to. In this video, we're going to change that. This is a complete beginner's guide to credit cards in 2026, what to look for, what to avoid, and the specific cards that are widely discussed as strong options for people just starting out. This is Yield Report Daily. Let's get into it. Quick note before we dive in. Everything in this video is purely educational. We're here to explain how credit cards work and what options exist, not to tell you what to do with your money. Always consider your own financial situation before applying for any financial product. Before we dive into the best cards for travel, cashback, or building credit, it's crucial we're all on the same page about how these things work. It sounds simple, but there's a huge gap between how credit cards are marketed and how they function behind the scenes. This misunderstanding is often where financial trouble begins, turning a potentially powerful tool into a source of stress. So let's strip away the jargon and get down to the fundamentals. At its core, a credit card is simply a tool for accessing a pre-approved, short-term loan from a financial institution, like a bank. When you swipe, tap, or enter your card details online, you're not spending your own money directly. Instead, the credit card company is stepping in to pay the merchant on your behalf. In return, you've created a debt that you now owe to the card company. Now here is the most important part of the entire process. At the end of each billing cycle, you'll receive a statement detailing all your purchases. If you pay that balance in full by the due date, you pay absolutely no interest on those purchases. Zero. Not only is the card free to use in this scenario, but you actually come out ahead. You've benefited from the convenience and security of the card, and you've earned rewards like cashback, points, or miles on spending you were going to do anyway. This is how you make the system work for you. The trap that many people fall into is carrying a balance from one month to the next. This happens when you only pay the minimum payment, or any amount less than the full statement balance. This is where credit card companies make a significant portion of their money. Any remaining balance is hit with interest, and it's not cheap. The average annual percentage rate, or APR, on credit cards in the US hovers around 20%, but it can be much higher. This interest compounds, meaning you start paying interest on your interest, and a small debt can quickly spiral into a much larger one. So the golden rule of credit cards is simple, and it's the only one you really need to remember. Only spend what you can already afford to pay back in full. Don't look at your credit limit as extra money. It's not. It's a loan that needs to be repaid promptly. The safest and smartest way to think about it is to treat your credit card exactly like a debit card, but one that comes with better fraud protection and valuable rewards. Stick to that single rule, and a credit card transforms from a potential debt trap into one of the most powerful and rewarding financial tools you can have in your wallet. So, you're ready to get your first credit card, but with so many options out there, how do you choose the right one? It can feel overwhelming, but it doesn't have to be. We've distilled the process down to 5 key features that every beginner should look for. Understanding these will help you find a card that works for you, not against you, as you start building your financial future. Let's walk through them one by one. First, and perhaps most importantly, look for a card with no annual fee. Many premium cards charge a yearly fee for access to exclusive perks, but as a beginner, your primary goal is to build credit history responsibly without incurring unnecessary costs. There are countless excellent cards available that charge $0 per year. This means you can keep the card open for a long time, which benefits your credit score, without ever having to pay just for the privilege of owning it. Second, consider cashback or rewards. This is where using a credit card can be more beneficial than a debit card. Many beginner-friendly cards offer a percentage of your spending back to you. This might be a flat 1% or 2% on every single purchase, or it could be higher rates in specific categories like groceries or dining. While it might not sound like much, even 1% back on your regular monthly spending can add up to a meaningful amount over the course of a year. It's like getting a small discount on everything you buy. Third on our list is a welcome bonus. To attract new customers, card issuers often offer a one-time bonus, typically in the form of cashback or points. To earn it, you usually need to spend a certain amount of money within the first few months of opening the account. For example, a card might offer a $200 bonus after you spend $1,000 in the first 3 months. If this aligns with your normal spending habits, it's essentially free money for purchases you were planning to make anyway. Just be sure the spending requirement is realistic for your budget. Fourth, check for low or no foreign transaction fees. This is a fee, often around 3%, that some cards charge on any purchase made in a foreign currency. This applies not only when you're traveling abroad, but also when you're shopping online from international retailers. If you have any plans to travel or enjoy buying from global websites, finding a card that waives this fee can save you a significant amount of money. Many great beginner cards now include this feature. And fifth, look for a straightforward and accessible approval process. Some of the most heavily advertised premium travel and rewards cards require a long and excellent credit history, which most beginners simply don't have yet. You want to apply for a card that is specifically designed for people with limited or no credit history. These are often marketed as student cards or cards for building credit. Applying for a card you're likely to be approved for helps you avoid a hard inquiry on your credit report for no reason, and gets you started on the right foot. The first card that comes up constantly in beginner personal finance discussions is the Capital One Quicksilver. Here's why it's so widely discussed. It offers unlimited 1.5% cashback on every single purchase, no categories to track, no limits, just a flat rate on everything you spend. There's no annual fee. New cardholders may be eligible for a welcome bonus after meeting an initial spending threshold, though terms change, so always check the current offer on Capital One's website. It's also widely considered one of the more accessible cards for people who are newer to credit. The simplicity is the appeal. You don't have to think about it. Every purchase earns cashback, automatically. The second card that gets a lot of attention in beginner finance circles is the Discover It Cashback card. What makes this one stand out is its first-year cashback match. Discover matches all the cashback you earn in your entire first year, dollar for dollar. So if you earn $200 in cashback over the year, Discover gives you another $200. That's a significant benefit unique to this card. It also offers 5% cashback on rotating quarterly categories, things like grocery stores, gas stations, restaurants, and Amazon, up to a quarterly maximum. All other purchases earn 1%, no annual fee, and Discover has a reputation for being approachable for people building their credit history for the first time. The third card that appears in almost every beginner credit card conversation is the Chase Freedom Flex. This one is popular because of how much value it packs in with no annual fee. It offers 5% cashback on rotating quarterly categories, 3% on dining and drugstores, and 1% on everything else. Chase also has a large and well-regarded rewards ecosystem. Points earned here can potentially be combined with other Chase cards down the line if your needs grow. There's typically a welcome bonus available for new cardholders as well. The Chase Freedom Flex is often described as a card that grows with you, useful as a beginner and still valuable as your financial life becomes more complex. Building good credit is a marathon, not a sprint, and just as important as knowing which steps to take is knowing which pitfalls to avoid. So, let's talk about what to watch out for, because not all credit cards are created equal, especially when you're just starting out. First on our list, store credit cards. These are the cards offered at the checkout counters of your favorite retailers. They almost always come with very high interest rates, sometimes soaring well above 25%. Their usefulness is also incredibly limited, often restricted to that one specific store or its affiliated brands. They can be tempting because of an instant discount offer, but that one-time saving can be quickly erased by interest charges if you carry even a small balance. For building a flexible and positive credit history, they're generally not the strongest long-term choice for beginners. Next, be cautious of cards with high annual fees before you understand the rewards ecosystem. Premium travel cards, for example, can be genuinely valuable, offering perks like airport lounge access and travel credits. But these benefits only pay off if you use them effectively, and they come with annual fees that can run into hundreds of dollars. Starting with one is usually not the best path until you know your spending habits and can be sure you'll maximize the rewards to outweigh the fee. And finally, avoid applying for multiple cards at once. It might seem like a good way to increase your options, but here's what happens behind the scenes. Each time you apply for new credit, the lender performs a hard inquiry on your credit report. A single inquiry has a small temporary impact on your credit score, but several hard inquiries in a short period can be a red flag to lenders, suggesting you might be in financial distress. This can lower your score more significantly and make it harder to get approved. The best strategy is to apply for one card at a time. Learn its features, use it responsibly, and then, after several months, you can consider adding another if it fits your financial goals. So there you have it, a complete overview of how credit cards work, what to look for, and 3 cards that come up repeatedly in beginner personal finance discussions. Links to explore each of these cards are in the description below. As always, these are affiliate links, which means if you apply through them, we may earn a small commission at no cost to you. That's how we keep this channel running. If you found this useful, subscribe to Yield Report Daily. We publish new videos every week breaking down personal finance topics in plain English, with no jargon and no financial advice, just education. Hit subscribe so you never miss a report, and we'll see you in the next one.